It really gets my blood going. How is everybody doing out there? Let's go ahead and get this party started right. So, for those of you who don't know who I am the the legend, the myth, the great Reginald Ringgold, investment coach extraordinaire, market leading expert leading market specialist. I was trading Forex and futures for years, but now this cryptocurrency thing has kind of gotten me losing sleep. But my wallets, I would say my wallets aren't light. So, the topic of today is got Bitcoin. Got Bitcoin. But a little bit about my background before we go over Bitcoin. Obviously, you guys can go on reginaldringgold.com. You can get a little more information regarding my background. I started out, my trading career many moons ago. Back in high school, I remember my mother would, she would always tell me, instead of wanting Nike shoes, why don't you get stock? Blah blah blah. And I would literally be, I'd be upset and annoyed because I would have to buy Nike stock before I could buy Nike shoes. So, as far as I'm concerned, the biggest thing for me that I learned early on is the need to invest before we spend our money. So before I was able to buy CDs or Walkmans, I had to buy stock. So give me 1 second, you guys. Let me check the mic. Can you guys hear me? Text if you can hear me. Type a 1 if you can hear me. All right. Just want to make sure that you guys can hear me. So before I could buy, I guess a Walkman, I would have to buy stock, things of that nature. So my mother was very good in making sure, and she instilled in me a financial literacy and just the importance of building a portfolio. I remember in high school, I wanted to play basketball. And when I started playing basketball, I was very passionate, just as I am about the markets. I was passionate about playing basketball, but those of you that know me, you know that I'm 5'7", maybe about 130 soaking wet. So I remember very well. I was in 11th grade, and she would tell me, you need to have a backup plan because what if this NBA dream doesn't work? I was the kid that walked around school with my basketball, and all I talked about was basketball. So she tells me, she says, you need to have a backup plan. And I looked at her kind of like a naysayer. For me, the only thing that I wanted to do at that time was play basketball. So she sat down and gathered some news clips and information on some of the hedge fund managers at the time that were making a lot of money. We'll say a lot of money compared to even athletes. And she comes to me and she says, you revere Michael Jordan, you look up to Magic Johnson, and these people are doing pretty good. They're rich, but there are people out there that are wealthy. There are people that cut their checks. The people that own the team cut the checks. He said, not only there are people that own the team, but there's a person that owns the league. And if you own, let's say, a team, then no one can tell you can't play. You don't have to get drafted. You can, put yourself out there on the court. So immediately light bulbs go off. And I'm like, wow, So she took it a step further and she says, David Tepper is a hedge fund manager. And she said that he made more money than all athletes combined that year in all sports. So that was very powerful. So she basically shifted my focus and helped me see where the money was. She also said that, there is no expiration in terms of how long you can do it. It doesn't discriminate on age, ethnicity, or your physical physique. So from there, I just started to focus in and look into certain things. Around that time, I got wind of the movie. It was the movie Wall Street. And in that movie, they talked about, trading stocks, different deals, and just the game, and Gordon Gekko, when I got wind of Gordon Gekko, I knew what it was that I wanted to do and where I wanted to shift my focus. At that time, it was just a backup plan. To me, if I didn't make it to the NBA and no one could tell me I wasn't going to make it, if I didn't make it to the NBA, My backup plan was to trade and run money. Now, instead of putting up points on the scoreboard, I put up points in my trading account, trading various indices as they're measured in points. So I remember when I started college, first year in college, I had my son at a very early age, and I had to make a choice between paying the tuition or paying for raising my son first year out. And having a child is very expensive. So obviously, I dropped out of school, but kept going. Continued to go and learn what I could learn, and then I opened up my own fund at the time. It wasn't really a fund that was licensed or set up, but it was just really for me to, let's say, instead of manage my money, we'll say lose my money, because that's all I was doing. But I transitioned into different parts of finance, started working in side banks, doing real estate, and I was pretty high up in the real estate industry. We actually opened up a mortgage brokerage, and then all of a sudden the market collapsed. It was around that time where I was at my wit's end, so I decided to shift my focus to trading the markets. And to make a long story short, it is paid off exponentially. I've done lecturing for different platforms, different schools and academies. Now, fortunately for you guys, the moment is here. I am now on my own platform. It's no holds bar. I can show you my accounts. I actually can help you guys take trades and give you direction as to where to go with this thing. And for those investors that are with me already, that are on this call, they're already seeing the fruits of the labor and receiving rewards from the benefits of being a part of the Block Traders Corner. We'll talk about the Block Traders Corner a little later, but for now, we're talking about myself, this beautiful guy on the screen. I'm just kidding. So let's move on here. So obviously the disclosure, let's talk about the disclosure. Well, let's not talk about the disclosure. Obviously, you guys know there are risks involved with trading and investing, but there's risk involved in anything we do. In fact, when you get out the bed, there's risk. You can stub your toe or step on a toy just from stepping out the bed. As soon as you walk out the house, things can happen. So as long as it's a calculated risk, we're okay. So that being said, give me 1 second here. Let's double check to see if we can see the slide here. All right, give me 1 second because the slide deck is a little stuck here. Hold on 1 second, you guys. All right. So Bitcoin, the main reason a lot of you guys are here, there's been a lot of hype around Bitcoin. And obviously with Bitcoin, it's been around for almost a decade now. And there's been some altcoins that have came out, but obviously, we've been hearing a lot of hype around Bitcoin, and it's actually starting to get kind of annoying to me, if you ask me. Please don't be one of those people that text me, call me, or email me, or direct message me asking me, hey, Reg, what's up with this Bitcoin? Or I'd like to invest in Bitcoin. I mean, obviously, I don't really mind if you're coming to me and you're eager, but just understand that, I've been talking about this for a very, very long time. So for those of you that are just now getting in, it's almost like you've been under a rock. But fortunately for you, I'm here to lift that rock and take the veil off and actually show you some of the wondrous things that are inside blockchain and the cryptocurrency sector. So, but why the spotlight on Bitcoin all of a sudden? Well, Japanese investors are increasingly switching from traditional Forex trading to Bitcoin. So you can see that we're experiencing a shift in paradigm. You can see here in this article, it says, we think that retail investors are shifting from leverage Forex trading to leverage cryptocurrency trading. Japanese men in their 30s and 40s who are engaged in leverage Forex trading are driving the cryptocurrency market. All right, that's pretty apparent with the liquidity that we see pretty much moving and driving the marketplace. It's no question. So high risk, high return. Leverage cryptocurrency trading services are available in Japan. For example, GMO coin offers 5 times or 15 times or up to 25 times leverage, 25 to 1 on Bitcoin yen trading. There's no transaction fee, but there is a leverage fee per day. So you can actually see that this market is moving. Sometimes you get some brokers that are giving even more than 25 times leverage. Some of them will give you 100 to 1 leverage. So you can see that the market is shifting. There is a paradigm shift in the marketplace. So Bitcoin's price just jumped 1,000 in 24 hours. I'm sure you guys have actually seen that the spikes. The spikes have been, evident. And I've been in Bitcoin for quite a while, and we just recently are seeing an explosion in the price. There's been some years where the price was pretty stable, and now you're actually seeing where price action is giving us, some pretty good movement, so to speak. I guess the slide deck is frozen for whatever reason. Give me 1 second here. I cannot understand why the slide deck would be frozen. All right, I think I'm just going to leave it like this. That should probably work. All right. So you've also seen other coins that have seen a increase in their price, an exponential rise. Litecoin earlier this week, it's seen an explosion in its price. It jumped from, I believe it was like $105 to around $336. It's now pretty much sitting at around $300 a coin. There's also other coins such as Ripple, which is actually now a lot higher than 30 cents. Ripple, I believe now is trading around 75 cents, if I'm not mistaken. Give me 1 second here. This slide deck is still frozen. Hold on 1 second here. All right, so I figure what I'm gonna have to do is I'm gonna probably have to just kind of go back and forth between the slide deck and the presentation, mainly because I guess the slide deck, since it's not online, as you switch the screen, it's not taking the slides. So, oh well, we figure a way around it. So as you can see here, obviously Litecoin exploded. Not only Ripple exploded, but Neem had an explosion as well. So both of those coins, amongst other coins, have seen some pretty good movement. But Bitcoin's up, everything else down. Obviously, everything, when we say everything, we mean everything else, such as the stock market. All right, the stock market has been kind of dull. It's been lackluster as of the last few days, or the last quarter. A lot of the exchanges as well. We've been seeing them experience a server overload. A lot of the exchanges like Coinbase, some of the exchanges that you guys are familiar with, they've been seeing a lot of customers coming into their websites. And if you ask me, Coinbase, not only because their servers are overloaded, and a lot of times it can be hard to buy and sell Bitcoin because they have delays in taking the money out of your bank account, as well as having the coin become available, especially if you're buying with market orders, which is the only thing they offer. But they also charge high spreads. So if you ask me, there are other exchanges that you can trade with, but even those exchanges are experiencing some server overloads, as you see a lot of people coming in and trying to get into this glorious market here. So why all the hype and hysteria? I mean, again, like I said, it's been around for pretty much a decade. But I guess the true hype behind everything as far as crypto is concerned, would primarily have to be Bitcoin futures. Bitcoin futures, and I'm pretty sure a lot of us have heard the Merck just came out, I believe it was today. The CME just came out today with their futures, as well as the CBOE came out last week with their futures product. Obviously, the biggest thing that I think that you guys have to be aware of is that the futures traded with the CME is a derivative. Okay, it derives its price from the actual Bitcoin spot market. Okay, so since it's a derivative, you have to keep in mind that they're not buying or selling Bitcoin in the physical spot market because it's not cash settled. It's not Bitcoin settled. It's cash settled. That means when you deposit money into the account, you're depositing cash. If you close out a trade or the trade goes to settlement and expiration, you're going to be paid out in cash. The challenges with that is if you're looking to collect Bitcoin or gain Bitcoin and settle in Bitcoin, you're going to have to take your cash and go and buy Bitcoin in the spot market. With the delay in time, there's a lot of slippage that you're going to be faced with where you could end up losing on the trade due to slippage by not being able to reinitiate the position at where you closed out the position with the broker at, or the exchange in futures where it was cash settled. You also have challenges where there's fees for going in and buying on the buy side when you buy from a broker or an exchange. So when you combine all of that, it becomes really defeats the purpose. Not only that, the Merc is not decentralized. So it defeats a lot of the purposes and benefits that come from trading and dealing in blockchain. Okay. So another thing that I would say that makes trading the futures market in general, because I'm a big proponent of trading Bitcoin futures when it is Bitcoin settled, but it's kind of like legalized betting. You're able to trade with leverage. I'm able to have a lot more buying power. Right now, a lot of you are concerned about the price of Bitcoin as it is. I know at $19,000 a coin, the price of Bitcoin for one whole coin can be quite pricey. That's very understandable. But when we're talking about a fraction of a coin, when you understand that you can buy a fraction of a coin, that puts us in a better place and in a better position to be able to go in and build and accumulate a position in Bitcoin or other cryptocurrencies, irregardless of how much we're working with as far as our portfolio and liquidity is right now at the present tense. Okay. Another one thing that I love about some of these exchanges is that they're getting a lot of their price quotes from Gemini, the Gemini index. I'll talk about Gemini a little later on. Gemini is a broker that I particularly trade with, and they're an exchange that I buy my Bitcoin and sell my Bitcoin from. We'll talk about them a little bit later on. Okay. So what did we do? Or actually, let me back up. I don't want to talk about what I did first. Let's talk about mainly what happened on day one of the trading the Bitcoin futures on the Merc. Things went so well that prices jumped 25% and they halted trading. Okay, they halted trading. Now, what they have in the futures market is a circuit breaker or a limit move. And this was some of the fears and concerns they had because they knew the shorters were going to pretty much get their you-know-what's handed to them. So they were worried about allowing you to trade on too much margin or a move moving too much against traders. Well, it did just that. It moved 25% and then some. Well, what they did was they halted all trading. Well, what we were able to do over at Block Traders Corner, we were able to realize, and for those of you that are following my Facebook, on day one, we were up 488%. Okay, 488% return on our equity. And this is mainly because we're doing two things. We're long only Bitcoin at the present moment. There are strategies and options where we can take and short Bitcoin for the short term, taking short-term intervals as it does corrections to the downside. But for the most part, we're trading Bitcoin long. That means we're rewarded and we're paid as the price of Bitcoin rises. Now, we're also paid in Bitcoin. Okay, so our margin is also being held in Bitcoin. I'm gonna let that breathe for a second. Something else, ain't it? Now, since we are paid in Bitcoin and long Bitcoin, when the price of Bitcoin goes up, the value of the Bitcoin that we are collecting also goes higher. Okay, so it is almost like we're being paid twice, so to speak. So we experience a gain because of these factors. We're being paid in Bitcoin, as well as there are no circuit breakers or limit moves to halt our trading. Okay, and this was one of the biggest factors as to why our gains have seen an even bigger growth, as you'll see here in the next slide. Give me 1 second there, you guys. As you see here in the next slide, we're up 2,983% to date. And this is simply because of the fact that, again, we're long Bitcoin. It is being settled in Bitcoin. So the Bitcoin is worth more as we are being rewarded for being right on our trade. Now, another thing that makes this grand is that I get my margin back. So in essence, this is like renting your Bitcoin. I'm getting paid Bitcoin and I'm getting my Bitcoin back. I'm gonna let that breathe for a second. Woo, woo. It's like they talk about selling calls in the options market on stocks that you own. If I were to sell a call, it's like renting my stock. I'm getting paid to pretty much sell out on a price that's not going to be materialized before the expiration of the option, which means that I get to keep the premium. In this case, I'm long Bitcoin. My liquidation price is very low. Like if you come into the block traders corner, hang around the block a little bit, you'll understand some of the drawdown and corrections that we are prone to see in Bitcoin, so you'll understand where your stop loss or liquidation price should be. But I'm going to tell you some glorious things about BitMEX as well. But I want to take a moment to take a poll here. What is your knowledge of cryptocurrencies? Because I know some of you guys right now are probably looking at me like, what the heck is a BitMEX? What is a Bitcoin? What is a crypt coin or an alto coin? An altcoin? An Alberto coin? Obviously, you guys have heard a lot of things rumbling around, and the one thing I'd like to do is I'd like to establish an understanding here that a lot of us don't really know too much about the coin. I like to call it the coin. Most people don't have an understanding about Bitcoin, and you're not alone if you don't know anything about Bitcoin or have a limited knowledge. But I'd like to take this moment to take a poll, and I will have my faithful staff go ahead and work the poll here. And the poll is basically just to see what your gauge of knowledge is on Bitcoin. Do you have Bitcoin now? Are you trading Bitcoin at all? Okay. Here. So for those of you that are familiar with how to take the poll, excellent. There we go. So it's kind of like a mixed bag, I see. All right, good. So some of you have some knowledge. I guess most of you kind of have maybe limited knowledge. All right. Now it's kind of 50-50. Now the more knowledge is winning, then less knowledge. 50-50, so. Okay. All right. Sweet. All right. So safe to say, some of us have knowledge, some of us don't, but most of us don't really understand the mechanics behind blockchain. And I'm going to actually go, or Bitcoin for that matter. So I'm actually going to go a little bit deep into what is Bitcoin. So Bitcoin has been referred to as a reserve currency. So I'm sure you guys are familiar with the US dollar. The US dollar is a reserve currency much because of the petrodollar. And with Bitcoin, it's a reserve currency for cryptocurrencies, just as the US dollar is a reserve currency for altcoins. So people who acquire, I'm sorry, US dollar is a reserve currency for fiat currencies, just as Bitcoin is a reserve currency for altcoins, mainly because a majority of people who acquire the altcoins, they do so by using Bitcoin as a proxy. And most of the altcoins, they derive their value through the exchangeability of Bitcoin. But not just Bitcoin, the Ethereum as well is gaining popularity as its price has been exploding, and you're able to exchange altcoins for the Ethereum coin as well. Now, Bitcoin's both a digital currency and an open payment network. So think of if PayPal were to create a PayPal coin, or if they had a PayPal coin before there was a Bitcoin. In essence, that would be the same thing. Bitcoin would be, PayPal would be the same thing as Bitcoin if it were to come out with a PayPal coin. So it's a payment network within which the currency is transferred. So it's a distributed open source ledger or payment system that is still in beta, and it's in beta, but it works. Beta meaning that it is still improving and being developed to be enhanced. We saw that with the recent fork and Bitcoin Cash coming out, as well as the Bitcoin 2X. But the goal of blockchain system, and those are nothing more than altcoins, by the way. But the goal of blockchain system is to enable people to break free from the walled gardens of financial networks, credit cards, i.e. the banks and PayPal, the one we just named, and the fees and different delays that we see in dealing with a lot of the banks as it stands. So how is a Bitcoin transaction processed? I know a lot of you, this is probably the biggest challenge or the biggest mystery to you, shall I say, is understanding how a Bitcoin transaction is processed. So this starts and initiates with the payer. The payer initiates a Bitcoin payment by using a third-party wallet software. Okay, it could be anything like Exodus or your exchange, and then at this point, this and other pending transactions are broadcast on a global Bitcoin network. After that, every 10 minutes or so, the specialized computers on the network, they're known as miners. They collect a few hundred transactions in a block. All right, this is why it's called a blockchain. Next, the miners process the block, reaching a consensus with the new blockchain, which should look something like this. This here. So from there, you can see the miners are rewarded newly minted Bitcoin for providing vast amounts of computing power, giving the stake and the smooth functioning of the currency, as well as disseminating the new blockchain to the entire network and recording transactions in the latest block. From there, you, the payee, can use the wallet software to see whether the Bitcoin's arrived. Once it's arrived, you can spend the Bitcoin. You can send, spend, or lend, as I like to say. Okay. Now, as you'll see on the next slide, a second here, I break down, I guess, the whole process of how blockchain works. I'm not going to go through the whole process as a whole. I'm pretty sure some of you guys are snipping the slide. Go ahead and take a picture of the slide. You can see exactly how blockchain works along with your keys. But here's the thing I'd like to kind of say to sum up, blockchain is, it's just like a car. A lot of you use some kind of form of locomotive to get around. And whether it's a plane, train, a motorcycle, most of you, unless you're a mechanic, you don't really know exactly how the inner workings of the engine or on that particular locomotive works. Same with the internet. A lot of us use the internet or even our cell phones, but we don't know what's inside behind the internet that makes it work. Or even in the phone, we don't know the mechanics inside the phone that allow us to dial and call somebody and be able to communicate with someone halfway around the world. All right. So the same thing with blockchain and Bitcoin. You don't have to understand how it works on the back end to be able to have and benefit from its use in your everyday life, and as well as make money. But you can see here, and I don't know if we can on the slide if it'll show it properly, but how does blockchain function like the internet? Well, payment systems today, they're where the email was in the early 80s. Every provider's they build on their own system. So the customers, they have to use different systems to be able to interact with, the different exchanges, different brokers, and different platforms. None of them integrate or work together. But with the discovery of blockchain, the market anticipates the possibility of big companies losing control over the flow of people's money, just as they lose control over the flow of information when the internet came out. So this is very important that you understand, and you can see different developments coming out, such as Visa filing a patent for blockchain-based digital asset network. So recently, not just Visa, but lots of different big behemoth and conglomerates, financial conglomerates, have been filing patents on blockchain, as we'll talk about them a little bit later on in the slide. The why blockchain, okay? Well, there's a lot of hype around blockchain. Tries blockchain, it's valuable not just in exchanging value through currency or cryptocurrency, but blockchain also has value in other things as well. There's a lot of different companies that are using blockchain. You can also see blockchain bring efficiency to originating, servicing, and trading financial instruments as well as other things. But we also have the privacy that comes from blockchain. Okay, the system, it may remain totally private if desirable. The key differences between public and private blockchains can be found further in the different protocols or the different things that you write into the smart contract. If we're talking about, what you're developing when you're developing a certain platform to put a certain token on. Ease, it provides an easy mechanism for you to be able to allow users to securely transfer and assess your assets between parties and facilitate an easy audit of accounts, as well as for not only you, but your clients, if you're talking about a business, as well as, your portfolio that you're managing. Flexibility is very important. And the one thing that blockchain does give is flexibility. This doesn't mean that you have to have everything public or you have to do things a certain way. You can have things pretty much tweaked to your liking. A lot of the layouts, the dashboards are tweaked to your likings. They even got this ability to change the skins. The QR codes, you can change some of the QR codes to show your specific name. But the one thing is going to be constant is that they're all using wallets and special key codes to send and receive Bitcoin or other altcoins. Okay, so beyond Bitcoin, and let me actually put this particular slide here up. So beyond Bitcoin, blockchain is used for a multitude of different things. Blockchain, it underlies Bitcoin and enables institutions to transfer and record assets other than digital currency without an intermediary. So it's also used for remittances, diamonds, as well as other valuable high-ticket luxury items or high-end assets that need to be traded or transferred across the globe. Property titles, land records. This is something that is starting to move into the space and facilitate blockchain and public ledger. Interbank payments, as well as airline miles, accounting for certain publicly traded companies, U.S. Treasury repos, private shares, syndicated loans, as well as gold. One of the things that I think will be very big is one of the first countries that can get it right and use blockchain as well as a cryptocurrency and peg it to gold. They will see their currency be one of the big dogs on the block and kind of dethrone the dollar or take market share. But obviously, that's if they can outbeat Bitcoin first. But non-financial use cases, so digital content, document storage, you got different companies like BitProof, Scribe, Art Plus, Chainlink, Stampery, BlockTech. There's a lot of different companies out there that are using for the digital content aspect of it. authentication and authorization. They're starting to use blockchain for authentication and authorization, such as the Real McCoy, Degree of Trust, EverPass, Block Verify, digital identity, which is going to be very big moving forward in the future. Uniquid, One Name, and Trusted Tone are companies that are using blockchain and discovering that blockchain can help in digital identity, as well as marketplace. There's a marketplace providing premium rights and brand-based coins for different things like My Power offers the ability for you to sell your different things for online as well as services for Bitcoin and altcoin. Real estate, diamonds, gold, silver, reviews and endorsement. Blockchain's also showing an IoT, which is the Internet of Things. And the biggest thing is the financial use cases. I think the financial use cases are going to be very, very big because never have we seen in a industrial revolution a innovation that is going to affect and change the way that money is transferred or money and value changes hands. The powers that be, the Rothschilds, the Merovingians, the Schiffs, the Oppenheimers, the Rockefellers, I'll stop there. But the powers that be, they have had a stronghold on banking for a while, and blockchain is going to see this stronghold pretty much now leave their hands and be a level playing field where everyone will be able to take advantage. Now, I'd like to show you guys this particular slide here, which is a breakdown of the different case uses that you'll see inside blockchain. Okay, we've got retailing, person-to-person remittances, financial inclusions. The biggest thing is that a lot of this stuff is starting to be integrated. Obviously, the introduction of blockchain combines cryptography, my apologies, that's a tough, and distributed computing to deliver secure, direct, peer-to-peer transactions. It's instant trust, okay, without the need for a third party or a central party. At the heart, the distributed ledger of the distributed ledger. This is a tamper-proof public network hosted on a record of all consensus. So you can see that it's something that allows us to be able to transfer anything, for that matter, instantly without high fees, delays, or any third-party intervention. Now, blockchain numbers. There's 921 million cumulative VC investment in the Bitcoin and blockchain companies as of October 2015, and that number has actually grown exponentially. We've seen it jump to billions now. There are a bunch of different companies in the space. The funding in total or raised in the blockchain computer developers, 21 Inc. was actually one of the coins that did a initial crowdfunding or an ICO. They raised 121 million. And then there's 805 number of early stage Bitcoin and blockchain companies that are identified in the venture scanner. So there's a lot of different companies that are moving into the sector. And in fact, every day we're seeing new coins and new companies coming into the sector. Is actually the greatest transfer of wealth that we probably have ever seen or will ever see until something else comes in greater. But probably in our lifetime, we won't even see anything that comes close. Okay. So what is blockchain? Blockchain, I've been hearing a lot about the blockchain. Is it a block with a chain on it? No, that's not the case. Blockchain is decentralized. That means there is no one central location that can be hacked or attacked, so to speak, or shut down. It's non-government, and that's what makes it powerful. Remember these bullet points here, because these are some of the things that you want to kind of shape your focus around as far as these coins are concerned. So it's non-government. It will say blockchain technology. Yes. All right. Or some kind of smart contract. All right. ERC20 smart contract. Peer-to-peer. That means it's not bank-to-peer or broker-to-peer. It's peer-to-peer. Open source. So it's a public ledger. You can actually see everything as it's there on the public ledger. And it's also safe and secure. Okay. So because of these factors, we have instant trust in a world where there isn't any, especially in the financial sector. It's pretty much, hard to find instant trust. And this is why we have a lot of these third-party intermediaries. So as a result, you can see that Bitcoin's becoming a safe haven from hyperinflation for a lot of rich Latin Americans, as well as a lot of wealthy around the world. You have people in countries like Venezuela and Puerto Rico and many countries that are using Bitcoin as a medium of exchange, mainly because of their corrupt government and hyperinflation, which is causing their currency to be devalued. But they're calling Bitcoin the new gold. Now hold your horses. The one thing that Bitcoin is not is gold. I'm Ringgold, so I will co-sign and back gold all the time, all day, every day, because I love gold. Gold is tangible. You can hold gold. If I have gold in my hands, there is no counterparty risk. Bitcoin, the same thing. Bitcoin can be something that I have no counterparty risk on when I'm holding it in my cold offline wallet, but you still can't physically hold the Bitcoin. Now, there have been some instances where they've made Bitcoins and physical Bitcoins, but I believe that defeats the purpose, because if I'm putting a physical coin into existence and putting the serial number or the key code on the coin, then it could easily be stolen or burned down if my house were to burn down. So Bitcoin being the new gold, I wouldn't say just that. But Venezuela default, Puerto Rico bankruptcy judge freezes bankruptcy or freezes bond payments. You got a lot of stuff going on around the world right now as it pertains to finance. I mean, there's things going on in Brazil and have been going on in Brazil for a while, but the corporate woes linger. Venezuela defaults fears are, I guess, increasing as billions rise in debt. They're eating zoo animals out there now because it's so bad, and has been bad because the government's gone corrupt. In fact, the government stopped posting the inflation numbers, mainly because things have gotten away from them as far as inflation is concerned. In China, there's been bond defaults that have been, on the rise, first ever in the history of the People's Bank of China's reign. And also too big to fail, proving tough to tackle as banks fight bail-in bonds. We heard about bailouts, but bail-ins are when the bank physically just takes the money out of your bank. Okay, you're the creditor. Bail out, you're the debitor. The bail in, you're the creditor. And I don't really like being a creditor and having a non-recourse loan where I'm not getting my money back. And again, they're freezing the bond payments. That means that the debts that they owe, they're not paying. So we've lost trust primarily. You haven't, I know I have. And then what are we seeing in the sector, in the banking sector? As a lot of the news, I'm sure you've heard, the news has been doing as much as they can to talk down on Bitcoin. And it's kind of a shame. Glorious coin, we call it the coin. But obviously, the biggest thing is JP Morgan. Let's talk about JP Morgan. Jamie Dimon, he calls Bitcoin a fraud. He's then fined $4 billion for actual fraud over there at JP Morgan. Dimon calls Bitcoin a money laundering tool, while the Swiss authority FINMA cracks down on them for money laundering. Then in December, he recently writes that Bitcoin can replace gold. Oh man, no, we don't trust you, Chase. Okay, if you're banking with Chase, I wouldn't trust Chase. Okay, they should be chasing you for your money, as they shouldn't be trusted. But they recently tried to file for patents on blockchain, and they've tried to file for patents 175 times, and officially have been blocked 175 times. Mainly because Bank of America has filed for the blockchains and kind of beat them to it first. So you can actually see that it is quite interesting, but no surprise that they would be filing for patents on blockchain, okay? But Bank of America, we can't trust Bank of America either. Bank of America was one of the biggest ones they were a part of, and the reason that we had the financial collapse back in 2008. So we can't trust Bank of America either. What about Wells Fargo? Can we trust Wells Fargo? No. Wells Fargo, they still face over a dozen probes tied to the fake account scandal. The fake account scandal. Ain't that something else? So anybody heard about it? For those of you that haven't heard about it, you probably still have some money with Wells Fargo, because obviously I don't think that they would be open right now if everybody really knew and understood what they were doing. But they were stealing money from people's accounts. They walked away with a lot of money, paid a little bit in fines, and the managers were put under a lot of pressure. And they say it was unbearable, but I'm sure that the people in upper management were giving rewards for stealing pennies at a time out of your bank account. And I mean, it's mainly because, think about it, when you have money with a bank, they can take money out your bank account at any time, okay? Because they control the bank. They control the bank accounts that go into the bank. They control the money that goes into those bank accounts. With blockchain, no one can go in and take the money out of your e-wallet unless they try to hack it per se, or unless you give them the key codes or send it to them. So seize my bit? Not really, right? Not really. I think not. Because why? Bitcoin has a lot of security measures that go into Bitcoin. The security measures that go into Bitcoin are some of the things that make it the most powerful. Blockchain as well. But we have two-step verification, authentication. With the two-step verification authentication, you're able to actually see the email or text message come in, and when the text message comes in, from there, you type in the two-factor code and then you're logged in. If you don't have access to your cell phone or the email, no one can get into that account. So the two-factor authentication is something that the banks could do. Instead, the banks will freeze your bank account or freeze your card, blocking your ability to be able to go in and spend your money that's yours. In fact, it's a lot easier to put the money into the bank, much harder for you to take the money out of the bank. Now, give me 1 second here, you guys. Lagarde says ignoring cryptocurrencies may not be wise. You think? She stated earlier this year that at a conference, she said that she believes Bitcoin and cryptocurrencies will give traditional financial institutions a run for their money and eventually replace banks and financial institutions by eliminating the necessity for intermediaries and third-party service providers. So this was very, very important when she spoke. In fact, they're actually having another meeting, another G20 meeting coming up recently or very soon. But she says ignoring them may not be wise because she understands that the need for the third parties and these intermediaries is no longer a necessity. Now, I'm sure a lot of you guys are familiar with AML, anti-money laundering requirements, as well as KYC, know your customer, know your client requirements. And this is a lot of the things they put you through just to go in and open up an account. And there's no way that different jurisdictions and countries can have the same guidelines to open up accounts, as they don't have the same numbers and reporting requirements. So they're going to be different amongst various jurisdictions. A lot of them, they just choose not to deal with other jurisdictions that have more red tape and regulation. So especially our jurisdiction, it tend to block us, China, and other jurisdictions out from the party. But for the most part, when you deal with Bitcoin in general, it doesn't matter whether they claim to have us blocked. All it takes is a good old email address and a VPN to be able to get access to a lot of this stuff. So there really is no way that you can, actually go in and police blockchain or restrict blockchain or regulate blockchain or Bitcoin for that matter. But Lagarde was right. The reason I say that she was right, she was spot on, because now what we're seeing is the rise of cryptocurrencies. And not just in altcoins, but just cryptocurrencies from different states. Okay, Dubai is the first nation state to issue their own cryptocurrency, and you see other countries now following suit, such as Japan, different Iranian nations following suit. But you can even see on over here to the left, they got their different banner. I pulled that thing right off of a website. I was looking up some stuff, and it was an ad telling me to buy the coin. Now, I'd like to do a quick little test, just a quick one. I'd like to see with what I've showed you about blockchain so far, what would make a Dubai coin or a Japan coin, excuse my language, crap? I apologize for that. Excuse my language there. Give me some. What will make it? Let's see here. Hold on. Let's see if I got it. I don't think some of you guys know yet, huh? Yeah, okay, controlled by government. Okay, government involved. That means it's not decentralized, right? Right? Not decentralized. Sure as heck ain't non-government, right? Dubai isn't the capital city of the world. You got it, Eric. No, it isn't. Last time I checked. And Private says, yes, that's correct. Oh my goodness. Institutions. Yes, that's correct. Yes, that is correct. Not decentralized. What about Japan? Maybe Japan? No, not at all. Now they're supposed to be coming out with a Fed coin. Man, Fed coin, that cracks me up. I see some of my fellow students in here from the blast from the past. We're about to jumpstart 2018. It's going to be a good year. So let's talk about this transfer of wealth that we're seeing. And a lot of us are holding some form of fiat, okay? So what is this transfer of wealth we're seeing, okay? Net foreign assets of U.S. treasuries by official institutions officially have been seeing a serious decline. It started, you guys. Foreign institutions and governments are now dumping treasuries. And let me give you a little bit of layman's. That means they're selling US dollars and long Bitcoin. Sanctions drive Bitcoin appetite. As we should all have a Bitcoin appetite. North Korea dodging sanctions with a secret Bitcoin stash. Now, I'm sure a lot of you are familiar with SWIFT. SWIFT is the payment processing system or a payment network. SWIFT, my bad. I'm over here thinking of my Swiss bank account. SWIFT allows nations to send and receive money on the SWIFT network. And the IMF, as well as the US monetary system, what they would primarily do is block any nations that would not play ball from using the SWIFT network. And a lot of the Iranian nations developed Sucre to be able to, send and receive money, but there isn't that much liquidity in that pool, as not that many people use those currencies because they're not that prevalent in international trade. But SWIFT, yes, SWIFT is very liquid. Bitcoin is becoming a rival. Biggest reason that Bitcoin won't go anywhere and will be around forever and a day, as long as there is a need to exchange value, is because it allows you to transfer value without a third-party intervention, almost for a fraction of the cost that you pay in our current market. Right now, the current market cap is 614 billion. I had to say the because some of you probably would have heard and misheard and thought I said million. 614 billion. Yes. Bitcoin, it's about 316 billion of that. Altcoins, 297 billion. So Bitcoin Bitcoin has a 51% dominance in the sector, but Bitcoin's a lot bigger than a lot of stocks that we're seeing in the marketplace. I believe that Bitcoin's market cap almost at one point last week reached as high as JP Morgan's. So how tokenization is putting real world assets on blockchains. Assets will be tokenized and it will change finance. What is tokenization? Tokenization is the process of converting rights to an asset into a digital token on a blockchain. There is a great interest by financial intermediaries. Okay. Yes. Whoever asked 2,983%, that was one trade that I've been building. But think of the one trade is a trade where I scale in. That means I'm adding on a position. We'll talk about it a little later though. So assets will be tokenized. So a lot of the ICOs and token offerings that you're seeing that are coming out are mainly because there is not as much red tape or boundaries or restrictions to be able to solicit to investors when you're talking about moving to a blockchain structure or platform, as well as the full transparency and a ledger of all accounting of what goes in and what goes out and to whom it went to. Okay. Now, one of the things that I find, very funny, I find it hilarious. I like to say that one more time, hilarious, is how they talk about all this regulation, right? All this regulation. Bitcoin regulation. One of the things that was said a while back, and this was in 2014, please don't think that Bitcoin has changed. A lot of the hoopla about the fork was propaganda, and it just birthed altcoins. But the fork can't change something that is already done. It's a protocol that was written. It's done. Finito. Put a fork in it. It's almost like a virus. If I take a virus and I release the virus, I can't do anything about it. It's gone. It's released. I'm the person who created it. I can't control it anymore. So Satoshi Nakamoto, the person who created, or the group that created it, or the moniker that created Bitcoin, once he released it to the open source, we lost our ability to be able to control or change Bitcoin. So you can regulate this thing, which is good for us, baby. And as you see, I was the right VPS cloud server, VPN. It's funny, this adds there because this is the gateway. This is the way out. Oh man, regulating the coin. So next up, let's talk about fake news. A little bit of fake news, propaganda, because you know that they got a lot of propaganda going on, right? What are some of the 10 biggest lies that are told about Bitcoin? Bitcoin funds terrorism. Well, we'll start with the most asinine assertion here. Obviously, we'll have to start with the terrorism, okay? Although the entries in this list are pretty dumb, this is probably has to be the dumbest one, right? Funding terrorism. Terrorists and terrorist sympathizers, if you want to blame the crypto, try the US dollar, which has been used to fund more wars and proxy wars and bombings and hijackings and insurgencies than any other currency in the world. In fact, in 2016, Europol found no evidence that terrorists were using cryptocurrencies to fund their activities. It's not to say that it hasn't happened and won't happen, but it's telling you, however, that only the people linking Bitcoin to terrorism are the government seeking to crack down on the digital currency. If the major terrorist attack funded by Bitcoin were to occur, we'd never hear the end of it. But yeah, they will talk about it regardless. Next, one of my favorites, the bubble. Bitcoin is a bubble. We hear about the bubble, the bubble, the bubble. It's not a bubble. It's the pen that will pop the bubble. I mean, where do we even start with this one? It's not a bubble. It's not going to come crashing down to earth. It's certainly not going to return to zero. I mean, heck, if you could all help me bring it down to zero, it would be nice because I'd right back to the moon again. I take it back. I got too much coin for it to be going back down to zero. I'd be having a heart attack here. But we've long passed the point of no return to zero. It's not going to happen. Okay, but that won't stop the B word from being trotted around every time Bitcoin sheds another $1,000 or $2,000 to the upside. Now, there's going to be corrections along the way. There's no asset that we've ever seen in history that's just ascended straight to the moon like a rocket. I mean, Bitcoin's the only thing close or closest to being almost that straight line to the moon. But it's not about the pop. It's not a bubble at 3,000. Wasn't a bubble at 5,000. Wasn't at 10. And it sure is heck ain't a bubble at 19,000, baby. 19,000 and climbing. It still won't be next week, even though they're going to keep on posting more and more about it being a bubble. What about it's volatile? Bitcoin is volatile. For those who don't like to relish in the risk, hey, go put your money in the piggy bank. But obviously, it's not as volatile as some of the other things that we've seen. It's certainly less exciting asset to invest. There are certainly less exciting assets to invest in. But nevertheless, the notion that it's volatile, it needs to be kind of tamed a bit here because it's misguiding. Obviously, the media is pumping that. So hugely respected crypto experts would agree with me that Bitcoin's volatility is now lower than Twitter stock. Okay. Now there's still roller coaster days, but for the most part, its currency has gotten the digital currency has gotten blissfully calm relative to the Twitter stock, which has a 3.79% volatility on average per day. Bitcoin's got 2.68% average volatility, which is at par value, and the same as crude oil's volatility, which is volatile, but you understand volatility, we need it as traders. Bitcoin is a tulip bubble. Now let's just stop. Let's stop there. Okay. I personally don't like tulips. I like Bitcoins. I like gold. I like holding assets. I use fiat. Don't really like it too much, but I use it. I would rather have fiat than some tulip. I'll tell you that much. Tulip is perishable. It's not a medium of exchange for that matter. But for those of you that wonder why I keep talking about tulip here, there was a tulip bubble or a tulip mania, and it swept the 17th century Holland. All you got to do is go into the search engine and it'll give you the backstory. But the craze, it culminated the price of a particular bulb reaching 4,600 florins. From there, the only thing it could do was crash. But the thing is, there is no real intrinsic value behind the rubbish commodity. Now, just like seashells, pretty stones, or anything else, unless you have a bidder or someone who wants them, they're only worth it what someone's willing to pay for them. Now, Bitcoins, on the other hand, they're easy to divide. They're imperishable. They're easy to transport. They're a lot scarcer than tulips, and it allows you to be able to transfer value immediately without third-party intervention. Okay. Now, how about Bitcoin's mostly used for illegal purposes? Dollars are used for illegal purposes too. I believe that there are more dollars used for illegal purposes than any other fiat currency in the world. As a matter of fact, HSBC sends boxes to the Mexican cartel for money that's laundered through HSBC. And you think they're stopping, or when they know, or if they were to find out it came from the Mexican cartel? No, they're going to continue to collect that money, that check. In fact, recently, there's an auction. I believe the Feds are doing an auction for Bitcoin, seized Bitcoin. Why? Because it has value. They can talk about it as junk and crap all they want, but it has value because there are bidders. There's demand for it. Okay. And another funny one. Before I move on, in 2013, yes, we had Silk Road, and early back then there was a lot of different websites and different mediums that were using Bitcoin for illegal means. When Bitcoin wasn't popular, yes, it was mainly used for illegal purposes. But now Bitcoin is used for mainly speculation as well as a medium of exchange. And I would like you to write this note down. Write this down. Okay. I hold Bitcoin. I hold altcoins. I hold most of my portfolio in gold and crypto. I use fiat for an immediate medium of exchange. That's it. In fact, people stop thinking I'm broke now because Bitcoin's jumping out the gym. I've been stopped holding US dollars. It takes me 24 to 40, or it used to take me 24 to 48 hours to convert my Bitcoin to fiat. Now I can do it in 5 minutes, and I'll show you how. As more developments are discovered, we're able to get liquid faster. But there was a joke about Bitcoin millionaires in the past where, hey, I'm worth $1 million or so plus in Bitcoin, but I can't even buy a coffee. Now those days are over, baby. I'm buying the whole Starbucks. For the love of money. And they say Bitcoin's a Ponzi scheme. No. That's not true. There are certain coins that have a multi-level marketing kind of structure, but Bitcoin does not pay you for referring people to Bitcoin. If you go buy Bitcoin today because of my recommendation, I make nothing off you buying Bitcoin, except the fact that its price rises as more liquidity comes in the market. Next is Bitcoin can be hacked. They talk about Bitcoin being hacked. This is really funny to me because yes, you can hack a wallet that is on a exchange that is weak, so to speak. You can hack a particular wallet that is, I guess, has weak two-step security factors on it, as well as someone who's public with their key codes and information. I will show you different ways that you can protect your wealth with Bitcoin. I usually use a third-party wallet to send and receive things to before I send it to where most of my coins are stored. That way I'm not using my actual address direct interface with the public, okay? But yeah, that's that. Now Bitcoin's a fad. That's another one out there. No. We know that it wasn't a fad when it went and went past the price of gold and kept climbing, as well as when it dipped and seen all of its gains and then some, come climbing back on the board. And then last but not least, Bitcoin uses exorbitant amounts of energy. Now this is the most funniest one of all. They said one Bitcoin mining transaction takes the same amount of energy that it takes to power 9 homes. This is malarkey. Man, but they'll say anything. They will say anything. So obviously, you know me. I'll tell you, like I always said when I was up on the stage, I'll say it here, behind the mic, don't believe the hype, okay? So Bitcoin too far, too fast, Bitcoin bubble forming, Bitcoin won't end well. Ooh. Meanwhile, what's Bitcoin doing? We're seeing Bitcoin rise to higher heights and heights that we actually we haven't even been able to see in any other currencies or any other asset classes for that matter. But as a result of all of the hype behind and surrounding Bitcoin, we're seeing a lot of regulation. They're starting to talk about regulation pretty heavy now and red tape, as they always do. Governments, whenever we have a way to break free from, poverty, they tend to want to come in and restrict our ability to be able to make money. But governments want to control cryptocurrencies, but obviously there's a danger to too many rules. There's a lot of liquidity that comes into the marketplace and it helps GDP and everything for that matter. So if they just come in and try to regulate the markets, it could create catastrophic effects on the market as a whole. But anybody know what's coming out in the next few days? There's something that's coming out. It's going to be pretty big. Crypto to take center stage at G20. Yeah, that's right. Need to see how we can regulate this thing is what they're trying to say here. We got to figure out how to stop them from getting all this coin. Or something else. Bunch of haters. So heading into Sunday, Bitcoin futures, the big banks, they started to refuse people from getting access to Bitcoin. And they're talking about, yes, the tax bill as well, Eric. lot of different things, coming out that you'll see down the pike. But the biggest was they tried to flat out stop your ability to get into this glorious world of blockchain. And they did this by blocking your ability to put cash into someone's bank account. I'm going to tell you why this is very important for people that purchase Bitcoin with brokers. When you purchase Bitcoin offline, you put cash into someone's bank account, i.e. the broker. When I put cash in the broker's bank account, he transfers the coin within 5 minutes of a receipt showing proof that you purchased the coin. Before you purchase the coins, you have to go through a small KYC process, simple as just taking a picture of your ID, as well as a selfie with your ID held next to your face, and voila, you've been verified. You can buy coins with no limitations, with a very minimal fee. They don't mark up spreads. Well, they pretty much put a clamp on that by refusing the ability to put cash in someone's bank account. Now you got to put a cashier's check or a money order. What that does is now it takes the turnaround time from 5 minutes to 24 to 48 hours. And it's very tough for you to be able to trust somebody that you never ever met or did business with. And it definitely opens the floodgates for somebody to run off with your coin in 24 to 48 hours with that kind of window there. But at Black Traders Corner, we'll talk about how you can be able to mitigate that and help yourself. Let's talk about the transfer of wealth that we're seeing. Recently, I have, I would say the last couple of months, I've decided to just, fully hold crypto. Let's see here. Hold on one second here. So, excellent. So I fully decided to take, the assets that I have and just hold crypto because I'm not getting rewarded for US dollars. I mean, I would do a poll, but I'm pretty sure I know the answer. Most of you have never seen your US dollars in your bank account double in their net worth, or their worth, shall I say, in a 1 month time span. Never. You never looked in your account and had 1,000 in there and came back and there was just 2,000 all of a sudden, unless you had passive income rolling in there. But the value of the dollars never went up, shall I say, in your lifetime. In fact, in your lifetime, the purchasing power of your dollar has gone down. Now, we all know why. It's quantitative easing. They've been printing more and more money. In layman's terms, they're diluting your value or stealing your wealth as the value gets transferred into their hands. So the purchasing power of the dollar has gone down exponentially, but the purchasing power of Bitcoin's gone up. The main reason of this is because Bitcoin is deflationary and most of the other coins are deflationary. They have a max coin supply. Write that down, Jack. They can't steal your wealth. They got a max coin supply. That means that once Bitcoin gets to 21 million coins, there won't be any more coins minted with the proof of work algorithm that was put into the coins protocol when it first came out. Now, dollars, I don't know. I mean, I don't go to too many FOMC meetings, but last time I checked, they keep on printing more, and them things are losing value. Now, Bitcoin futures approval sparks fears. They're saying that it could ignite a financial crisis all over again. And this isn't for me. Why ever convert back to US dollars, Adam? I don't know. Some people would say, why, but why ask why when you got coin, right? No, I guess people are scared. Some people are we don't know much about, Bitcoin or what it is or blockchain. To transfer your whole net worth can be probably one of the hardest things that you've ever had to do. And this is going to be very tough. That's why I'm over here at the forefront, baby. I'm going to be ushering everyone on in, and it's going to help collapse the financial system and put it back in the hands of the people where it belongs. But just saying here, Bitcoin could spark a financial crisis all over again. They say that if the Bitcoin price increases acutely, it could innate a global financial crisis. This is no joke, okay? It could innate a global financial crisis. Now, it won't affect those who are holding the coin. Yeah, it won't affect us. For those of you who have most of your assets in fiat currency, you will experience a serious drawdown in your bank account as well as your portfolio. Okay. Now on this slide here, you can actually see that we've got the US dollar, and you can see its purchasing power over the last, I guess, century. And it's done nothing but lose its purchasing power. In fact, it's lost 97% of its purchasing power. I'm sure a lot of you guys heard the term from your elders, back in my day. Well, I'm old enough now to say that, mainly because of how inflation is just inflating and shooting to the moon and starting to hyperinflate. But I can now say back in my day, a candy bar was 50 cents. Matter of fact, I could get on the bus for 50 cents. And little Debbie was 25 cents and she wasn't little. You bet that. Now little Debbie is little. She's little, just a little teeny little cookie. I better eat it. Now I need two. And it's 50 cents. I paid $1. Chip bag got more air than chips. Oh my goodness. It ain't because it's more expensive to make this stuff. It's because your dollars are losing purchasing power. But that's something else. But you hold Bitcoin, it's not the same. You don't have that same result. So for those of you wondering why, we have people that are no matter what, we work hard, but you still don't see yourself getting ahead. It's mainly because the money that you're working for is continuing to lose value. All right, next slide. So here you can actually see we've got S&P 500 versus the Fed's balance sheet. This one is pretty big because you can actually see how the Fed's balance sheet correlates almost precisely with the spikes and the explosions that we see in the S&P 500. So what this means is it's systemic risk or leverage. What you have is in the FOMC meetings, they're basically doing what they call either quantitative easing or tapering. They're basically just buying small amounts of treasuries to just keep it afloat or cause it to pretty much rise and show growth. So I was laughing today because they were cheering at the indices now hitting all-time highs. Man, if I was outside playing basketball against myself and I give myself a high five for dunking on the air, I'd look like an airhead. And that's exactly what they look like. Oh, yes. So you can see here the average reserve currency lifespan on the next slide. In our lifetime, the average reserve currency lifespan has been about 94 years that we've seen the average reserve currency last. And this goes all the way back to 1400. The Portugal had an 80-year run. The Deutsche Mark was an 80-year run as well. We had some longer runs, such as Spain and British. The British pound was the reserve currency before the US dollar reigned supreme. Franc was before the pound. The pound switched to or moved away from a gold standard to fund wars. And it ushered in the dollar being a reserve currency. Bretton Woods pegged all the currencies to the US dollar and then pegged the dollar to gold at a $35 exchange rate. Now, things were fine at that time because we had an accountable accounting system. They could only write checks based on how much gold was sitting in the vault. Problem is we never audited the vault, okay? Now, who's next up? Because we're at year 97. And the dollar's already starting to see it lose its market share at a rapid clip. We're seeing about $10 billion a day moving into crypto. All you gotta do is just do the timeline on the clip and that number's snowballing. I'm seeing these things move so fast I can't even keep up with them. Matter of fact, I was pissed because I fell asleep last week and couldn't get into a couple of coins that exploded on me when I woke up. I was so pissed off. I was like, why, Lord, why do I have to sleep? I don't ever have to sleep for that matter. Bitcoin mania could ramp up global efforts to dethrone the dollar, is what they're saying in the news. You can believe this hype. Matter of fact, I've been talking about this one for a minute. Know it. Man, I've been talking about Bitcoin for a minute too. And the fact that it is just booming and moving makes me happy. But I want everybody else to get on the ride and enjoy the ride with me. Okay? So they're saying it could dethrone the dollar. Why? Well, obviously,